Bill Walsh, before we get your outlook for munis in 2015, what'd you think about last year? That was some great ride for municipal bonds.
Certainly was. I mean, municipal bonds performed very well in 2014, both in current income coming in and, of course, overall total return.
And what do you think drove that?
I think it was basically supply driven. I mean, there weren't new issues were certainly down. Demand, I think, was certainly up with where other rates were on fixed income items. Municipal bonds certainly looked very favorable, and some people still just don't want to have all their money in the equity market, even though that's performing well. They want the safety of a municipal bond.
What's your outlook for supply in 2015? The economy is growing, maybe 3.5%, maybe even more. So you think the states are going to start loosening up and selling more bonds?
I don't know. From what we're seeing right now, we're seeing that supply will probably be similar to 2014. And at Hennion Walsh, we're certainly seeing demand right now. The demand for municipal bonds is strong. I mean, the 30-year Treasury rates today are somewhere around 2.5%. I'm thinking the 10-year is just around 2%. And there's new issue municipal bonds coming out at 3.25%, 3.5%, high quality, tax-free.
And last year we also settled Detroit. Seemed to be an isolated incident, right?
I agree. I think it was certainly a big incident if you held the securities or if you held the bonds. But many retail investors did not own those bonds. It was a lot of institutional. And at the end of the day, I think it was a neutral to the market. And as we said, we saw a lot of demand last year, and I think we're going to see a lot of demand this year.
Well, Detroit is in the rearview mirror now, and right now everyone's looking through the windshield at Illinois. Would you step in and buy Illinois bonds? Because they're having big fiscal problems out in that state.
I think Illinois it depends. It depends what you're looking for as an investor. What we try to do is we try to really gear what your objectives are. And there's certainly possible fluctuations in Illinois. I think you still got to look at their pension liabilities. It's pretty big. So I think there could be some fluctuation, but overall, still an investment-grade quality security. So depending upon your risk tolerance, it could be a good buy.
And it's hard to find yield anywhere. Once again, you have the 10-year Treasury now below 2%. So when you're going to buy a muni bond, what about high-yield muni bonds? Because this is a category which got a lot of interest last year.
True, but for an individual investor buying single-issue bonds, which is at Hennion Walsh, is what we would prefer to talk to investors about, you got to be careful with the high yield, because high yield can go default. High quality very seldom goes default. And when you're holding a position, you don't want to negate all the income you got with some sort of default.
All right, thanks a lot, Bill.
Thanks for having me.
Thank you for watching The Street.